Hi there, Shingirai here again with another update on portfolio performance over the past week. On a one-week basis, CBAM portfolio returns range from CBAM 1 V2 returning minus 0.51% up to CBAM 5 returning 1.09% in a relatively risk-on week. You saw some recovery there for our Japanese equity positions, both hedged and unhedged through JP Morgan Japanese equity funds, returning north of 3.5%. And that's really been bolstered by news that the Japanese government intends on dropping the requirement for a negative COVID result test for tourists coming into the country, and that is anticipated to boost tourism and the domestic economy. We also saw some bounce back there from equity Indian subcontinent, returning 2.83 on the one-week basis. Shifting over to negative detractors from performance, we continue to see headwinds there for 91 global gold miners in an environment where we continue to see hawkish stances from Federal Reserve banks around the world, and that would see the non-interest returning asset, gold, really experiencing some headwinds there. 91 global gold down 4.97% on a one-week basis. Some hawkishness again from the Bank of England, with anticipation for inflation getting as high as 13% towards the back end of the year. We'd see anticipation for a more sort of aggressive rate hike cycle coming from the Bank of England, and that would see the LNG All Stocks Gilt Index down minus 2.56% on the one-week basis. Looking over to the quarter-to-date basis, 1 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from 7.76% for CBAM portfolio number 5 down to 2.47% for CBAM 1 V2. In terms of positive contributors to performance, we do continue to see that sustained strength coming from alternative energy sources as Europe continues to try to navigate an energy crisis, and also news coming out of the United States that a lot of homesteads would be unable to service the utility bills, and that would really be a tailwind for alternative energy solutions through iShares Global Clean Energy and Pictet Clean Energy up more than 23% on the quarter. Japanese equity again continues to be a star performer on the quarter after giving up some performance in the first half of the year, and that would see also some optimism there beyond tourism restrictions being lifted, Q1 GDP being revised upwards, some increase in private consumption and increase in government spending, and also some increase in business investment really being tailwinds for Japanese equity, up 14.6% on the quarter. We continue to see headwinds for Chinese equity, as we've been highlighting for the past couple of weeks, but not marginally worse off than we were last week reporting these numbers. HSBC down 10.14% on the quarter on the back of woes that we continue to see in the property market, but widely anticipating that Beijing will step in at some stage and intervene in order to avoid having a property market bubble, as that represents north of 20% of GDP. We continue then again to see weakness for 91 global gold. Again, as I highlighted earlier, a non-interest-bearing asset in a rising interest rate environment, causing investors to flee away from the traditionally safe haven asset of gold.